Hello and welcome to LAT's Weekly Market Insights. It's been a quiet week both in the news and on the charts. Indice markets across the board take a breather as all-time highs are challenged. The tech sector, however, continues to outperform, with the Nasdaq moving to new highs once again. As we look to the chart, we can see that procession of higher highs and higher lows, and most recently the previous resistance acting as support, continuing this upward pressure. Fears around this rising wedge and therefore a potential bearish move as of yet not realized, but with S&P testing all-time highs and forming double top formations, potentially we could see a corrective move in the indice markets coming into next week. In previous weeks, we've discussed the importance of primary analysis and the potential false signals generated by your secondary indicators. This week, I want to focus on how secondaries can reinforce and strengthen positions when used in tandem with primary analysis. Dollar yen this week has provided some brilliant trading opportunities. We're going to have a look into the chart and see how we could have capitalized on the ongoing dollar weakness that we've seen of late. I want us to start here on the 4-hour chart. And the first point is just to recognize the major trend. So we're just going to pick out our highs and lows, as you've seen me do through many of my charts. We'll pick out that trend and we'll clearly define it as a downtrend by showing this succession of lower highs and lower lows. From there, we can start to introduce some support and resistance. Clear support here. Okay, nice support once, twice, three, 4 times with the break, came back, retested it, and then indecision at this level. Clear resistance sat up above us here, failing once, twice, 3 times before breaking lower. We can find key support a little lower here down at this 105.27 region, and it's a great example here of where support becomes resistance. Initially acting as support, broke became resistance, clean break through to back test it as support, and then a false breakdown here with tests either side before pushing back higher. However, with the major trend down and dollar weakness across the board, we're looking for short opportunities within dollar yen. And the hourly chart presented itself with a fantastic price pattern and counter trend line break. If I pop in my counter trend line from here, taking it from the absolute low of the trend, I can confirm this counter trend line with 3 touches. First touch, second touch, third touch. As we look to the highs here, we start to see this double top formation, the price failing to break to new highs in this counter trend bullish move. That failure to post a new high generated a double top, a bearish reversal signal, which fell in line with a break of the counter trend line. So a break of that previous low here, a break of the counter trend line signified this potential short position. A small corrective move as we broke before aggressively moving lower. Now let's not forget here, we are on this 4-hour chart and we're looking at a major downtrend. With this counter trend broken, that opens up downside potential for a move down towards the low down here. And of course, in a major downtrend such as this, expectations for this market would be to go and to break and to at least challenge the low of this downtrend. Now I want to introduce some secondaries, as we mentioned. I'm going to introduce the 50-period moving average and some monthly pivot points. Monthly pivot point here sat right at the high in the rejection that we saw just yesterday on the market. It also falls in line with this 50-period moving average, acting as dynamic resistance. Now the pivot point effectively acting as an average of the previous month, being calculated from the high, the low, and the close of the previous month's data. Now, as we dive into this in a little bit more detail, given that expectations are to go down and challenge the low, it was great to see this Fibonacci retracement from the sell-off of the double top. That retracement brought the market back up into that 50 to 61% sell zone. And again, that's a secondary indicator. So before we can look at opportunities to be short, again, the dollar, we must confirm that with primary analysis. Here we can see a clear resistance level forming multiple failures, or once, twice, 3, 4 times, before eventually coming back and retesting that resistance level. Let's not forget, at this level now, we have the pivot point, the moving average on the 4-hour time frame, this fib retracement, and now this resistance level. As a cherry on top, the market also gifted us this fantastic shooting star. Again, a primary analysis, candlestick formation, a bearish reversal pattern, suggesting potential downside movement. As we now come into an execution time frame, we start to look at the 15-minute chart. I'm going to remove the fibs, so it's clustering up the chart. We start to see a fantastic, again, primary analysis price pattern formation, and that's in the form of a head and shoulders. We can see that left shoulder, head, right shoulder formation here. Of course, a break of the neckline of a head and shoulders suggests continuation to the downside. That neckline sitting either side of the head. A break of that provided us with an entry level, stop loss above the right shoulder. Always possibility, should we wish, to go back above the head, but above the right shoulder, behind that previous lower high, more than sufficient before we saw this market sell off. MPOs for head and shoulders, always take the top of the head down to the neckline, project that distance, and that will provide us with that minimum price objective. And we can see just short of that minimum price objective, this little bounce in the market before we continued lower. Now, we've discussed moving averages on the 4-hour chart, so let's bring that 50-period moving average back into play. And one of the most simple methods for moving averages is to sell below and buy above. And we can see here as this counter trend formed on the 15-minute, the price was up above this moving average. As we broke the neckline of the head and shoulders, we crossed below that moving average, and then we retested it on the way down once, twice, and now most recently, currently a test of this moving average again. So clear dynamic resistance being created here by this 50-period moving average. Now, this was a lovely trade setup here, capitalizing on dollar weakness, but what's most important is it's the primary analysis leading the way, the overall trend direction, the counter trend, the price patterns, the support, the resistance. We're then utilizing pivot points, moving averages to reinforce our confidence in that position, increase our confirmation, and ultimately increase our chances of success. As we look to next week, all eyes will be on the Jackson Hole Symposium. Every year, the symposium focuses on important economic issues but faces world economies. We'll be waiting to see Jerome Powell's comments and remarks towards the end of Thursday once that symposium has come to an end. And that is all from us this week at LAT. Please do join us next week for another Weekly Market Insights.